Honest with yourself for a second. When you hear the word investing, what is the very first image that flashes into your mind? For a lot of us, it's a casino. We picture a slot machine taking our hard-earned money. We picture a bunch of guys in suits shouting on Wall Street. Or we picture a giant red arrow pointing straight down, wiping out our savings in a matter of seconds. The thought of taking the money you worked 40, 50, or 60 hours a week for and putting it into a system you don't fully understand feels terrifying. It feels reckless. For most people, keeping money in a standard bank account feels like a warm, safe blanket. But putting it into the stock market, that feels like jumping out of an airplane and just hoping somebody packed your parachute. If that is how you feel, I need you to know something right now. You are not crazy. You are not bad with money. And you are definitely not alone. It is completely normal to be afraid of losing what you've worked so hard to build. Welcome to Simply Wealth Wiser. On this channel, our entire mission is to cut through the complicated financial jargon and help you make smart, simple moves with your money. Today, we are tackling the massive psychological wall that stops 90% of beginners from building wealth. Over the next 10 minutes, we are going to break down exactly why your brain is wired to fear the stock market. And I am going to give you a simple roadmap to start investing without losing a single night of sleep. Grab a notebook and let's get wiser. Before we talk about how to invest, we have to understand why you haven't started yet. Let's look at the 4 psychological traps keeping you stuck. Reason number 1 is a behavioral science concept called loss aversion. Scientists have proven that the psychological pain of losing $100 is twice as intense as the joy of making $100. Our brains are hardwired for survival. So when you look at the stock market, your brain completely ignores the fact that your money could double over a decade. All it focuses on is, wait, there's a chance I could lose this. No thanks. We would rather accept zero growth than risk feeling the pain of a loss. Reason number 2 is that we confuse volatility with danger. Let me give you an analogy. Imagine you are flying on a plane and you hit some rough turbulence. Your coffee spills, the plane shakes, and it feels terrifying. But is the plane crashing? No. It's just turbulence. The stock market is the exact same way. Day to day, it drops and rises. That is volatility. That is turbulence. But historically, over the long term, the market has always recovered and gone up. Beginners panic over daily turbulence. Wealthy investors zoom out, look at the big picture, and relax. Reason number 3 is the media. Think about your news feed. You will never, ever see a headline that says, "Stock market grew steadily by 8%. This year, everything is fine." Instead, you see massive red banners screaming about recessions and market crashes. Fear gets clicks. Panic sells advertising. If your only exposure to investing is the evening news, of course you're terrified. You are being fed a daily diet of worst-case scenarios. And reason number 4, decision paralysis. Let's say you decide to invest today. What do? Do you buy Apple, Tesla, Bitcoin, an ETF, a mutual fund? There are thousands of options. When the human brain faces too many complex choices, it does something very predictable. It freezes. It chooses to do absolutely nothing, because doing nothing feels safer than making the wrong choice. So, how do we fix this? We need to completely reprogram how you view the stock market. Most people think investing is placing a bet on a random 3 or 4-letter ticker symbol moving up or down on a computer screen. I want you to wipe that from your memory right now. When you buy a stock, you are not gambling. You are buying a tiny legal piece of ownership in a real, living, breathing business. Think about your daily life. You check your iPhone, you buy coffee, you order a package on Amazon, you search for a recipe on Google. These companies are generating billions of dollars in profit every single day, fueled by consumers just like you. When you invest, you are simply saying, I want a piece of that profit. You are moving your identity from being purely a consumer of these brands to being a partial owner of these brands. You are letting the smartest CEOs and employees in the world go to work to make you money. And here is the ultimate perspective flip and the hardest truth to accept. Not investing is actually the biggest financial risk you can take because of a silent thief called inflation. If you have $10,000 sitting in a checking account, it is losing its buying power every single year. Groceries, housing, and gas get more expensive, but your money stays exactly the same. Keeping all your money in cash is a guaranteed 100% mathematical loss. Investing is how you build a shield to protect your money's buying power for your future. Okay, we know the monster under the bed is just a shadow. Let's turn on the lights. If you are starting from absolute zero, how do you actually start without getting overwhelmed? Here is your 4-step action plan. You can literally pause the video on these steps and write them down. Step 1. Build your financial shield. Before you invest a single penny in the stock market, you need an emergency fund. I recommend saving 3 to 6 months of basic living expenses in a high-yield savings account. Why? Because the quickest way to lose money in the market is being forced to sell your investments in a panic because your car broke down. An emergency fund acts like a moat around your financial castle. It lets you leave your investments alone to grow, completely untouched by life's random surprises. Step 2. Keep it incredibly boring. Forget picking individual stocks. Forget trying to find the next viral cryptocurrency. For beginners, the absolute best tool is an index fund or an ETF, specifically one that tracks the S&P 500. What is the S&P 500? It is simply a basket that holds the 500 largest, most successful companies in the United States. John Bogle, founder of Vanguard Group, once said, "Don't look for the needle in the haystack. Just buy the haystack." If one company out of those 500 goes bankrupt, you don't lose your money because the other 499 companies are holding you up. It is the easiest way to lower your risk while capturing the growth of the economy. Step 3. Start embarrassingly small. A massive myth is that you need $5,000 to start investing. No, you don't. I want you to start with an amount so small that you wouldn't even care if you lost it. $10 a week or $50 a month. Just open an account with a reputable, beginner-friendly brokers and buy a fractional share of an S&P 500 ETF. The goal right now is not to get rich. The goal is to break the psychological barrier. Once you invest that first $20 and you wake up the next day and realize the world didn't end, the fear vanishes. Step 4. Automate and walk away. Humans are emotional creatures. If you have to manually transfer money to your investment account every single month, eventually you'll stop. You'll look at the news, get scared, and try to time the market. You will fail. Instead, set up an automatic transfer. Have $20, $50, or $100 automatically moved from your bank to your investment account on the day you get paid. Then, close the app. Stop checking it. Remember the airplane turbulence. If you stare at the market every day, you'll just get motion sickness. Automate it. Go live your life. And let time and compound interest do the heavy lifting in the background. Taking control of your financial future is intimidating. It is totally normal to feel a little fear. But the fact that you watched this video all the way to this point proves that you have the desire to change your life. You don't need a degree in finance. You don't need to be a math genius. You just need patience, consistency, and the courage to take one tiny, embarrassingly small step forward. Remember this rule: imperfect action will always beat perfect delay. Do not wait for the perfect time to invest, or until you know everything, because that time does not exist. The best time to plant a tree was 20 years ago. The second best time is today. I would love to hear from you. What has been the biggest fear holding you back from investing? Let me know down in the comments below, and I will reply to as many as I can to help you out. If this video helped you overcome some of your fear today, please hit that like button. It really helps my channel to grow. And make sure to subscribe to Simply Wealth Wiser for more simple, powerful financial strategies. Your future self depends on the decisions you make today. Make them wise. I'll see you in the next video. Stay tuned.